The COVID-19 pandemic led to one of the most severe economic crises in the United States and the world has ever seen. The inflation that we saw after the pandemic also saw millions of people lose their livelihoods and the quality of their lives. But there's one post-pandemic sector that actually hasn't been crushed by it, the housing market. So here's a big question. Did Americans get richer after the pandemic? Unlike a lot of other markets, the housing market in the United States is undergoing a massive boom. But the question remains, is this a case of long-term wealth generation for American homeowners, or is the market in the midst of a bubble right now? Let's take a closer look. In 2019, the overall home equity in owner-occupied housing in the United States was worth around $19 trillion. Owner-occupied housing only makes up around 58.5% of the total housing in the United States, but it's considered the most important part of the housing sector when it comes to creating actual wealth. Even though the $19 trillion figure is pretty massive in and of itself, and it gives the US by far the most valuable housing market in the world, it pales in comparison to the numbers today. In 2022, the overall home equity in owner-occupied housing is worth around $25 trillion. That's a growth of over $6 trillion in just 3 years. In comparison, it took the US over 300 years to reach the $19 trillion mark. This kind of growth in value has not been seen in the US housing market's history. If you take a look at a chart of the growth, you'll see a slowly declining line up until the mid-2010s, followed by an upswing and eventually a sharp uptick following the pandemic. Now, what's the reason for this sudden increase in value? Did homeowners across the US suddenly make a massive upgrade to their housing that amounted to over $6 trillion? No. In reality, this upswing is caused by a severe housing shortage in the United States. In basic economics, when there's a lot of demand for a product, but there's little enough supply, the price of that product is bound to rise. We're seeing this in the housing market right now. If there was some sort of government initiative to build a lot of houses, or if some massive real estate company just decided to mass produce houses everywhere, the actual price of homes in the US would definitely start to see a decline. But that's not going to happen anytime soon. This increase in value is obviously beneficial to a lot of people. In fact, a majority of Americans are set to benefit from this. Around 65.4% of all Americans own their own house. For them, they're now richer in terms of net worth than ever before, primarily because the price of their houses has grown faster than ever before. Long story short, a majority of Americans are now wealthier even if they have the same amount of money in the bank. Similarly, real estate companies are set to benefit from this. They can now earn more profit than ever before, and their assets are also now worth a lot more than they were in the past. Additionally, this also benefits the national economy. If there is more wealth in the US, that also translates to a larger economy. GDP per capita in the US is now over $70,000 per person. Just 10 years ago, this figure was closer to $50,000 per person. The average American is richer, especially when compared to the rest of the world. However, the average can be super misleading. It's important to remember that there are a lot of Americans that don't get any benefit at all from the increase in housing value. 34% of Americans don't own housing value. 34% of Americans don't own a home right now. While that number might seem pretty small to you at first, it's still more than a third of the entire population of the United States. With house prices increasing faster than ever before, it's very likely that these people have an even lower chance of being able to buy a house in the future. Another thing to note is that home ownership in the US is heavily skewed towards older people. Despite making up over 22% of the US population, millennials only own 17% of the homes in the US. In fact, the rate at which millennials are actually buying homes is much slower than it used to be for older generations. For example, the average age at which a person first becomes a homeowner in the US is around 37 years old in 2022. If we go back to just 1991, the average age was around 28 years old. The primary reasons why Americans are taking a lot longer to purchase homes is that it's a lot harder to purchase homes. The average house price is increasing at a much faster pace than the average income, and the gap keeps widening with time. With the recent increase in home prices, this is going to get a lot worse, and it's going to directly affect the coming generations. Even though millennials have it pretty bad, it's Gen Z that is going to face the brunt of this semi-crisis. By the time Gen Zers are in their 30s and 40s, assuming the housing market continues to perform as well as it has over the past few years, it would be almost impossible for them to collect enough money to purchase their first home. The consequences of this are long term. It's hard to imagine a time when so much wealth was created in such a short amount of time. But with that in mind, it's also an indicator of how wealth generation is not equal all across the board. However, it's important to understand that the market isn't always constant in its path. Sure, in the ideal situation, for homeowners at least, the market would continue to grow in no value to no end. However, eventually the price is going to get way too high. If this market is going to sustain itself, the demand also needs to sustain itself. Sure, homeowners can continue to buy properties among themselves, but eventually new homeowners need to come into the picture, and they need to come into the picture at a higher rate than before. Why? Well, it's because the value of the market is increasing at a higher rate than before. As we've already mentioned, if the rate of new homeowners isn't increasing at the same rate, it's likely that a bubble is being created by the existing homeowners. Basically, it's a scenario in which all of the existing homeowners keep switching properties among themselves and the properties keep increasing in value. People who aren't homeowners are outside of this bubble, and it's practically impossible for them to get in because of the insanely high prices. Now, if the value of this bubble keeps increasing more and more, for a while, the people inside the bubble are going to continue to make money. But eventually, it's going to reach a point where it's simply too big and the bubble will pop. If the supposed bubble were to pop, it would lead to a massive crash in housing prices all across the board. This would be highly beneficial to the 35% that don't own a home, since not only will it be easier for them to actually buy a home, but the crash would also not directly affect them in any way. However, for the 65% that do own a home right now, it would be absolute carnage. Their wealth or their net worth would go down substantially. But what's actually going to cause this bubble to pop? Profit taking. You see, there are 5 stages of an economic bubble: the beginning, the boom, the euphoria, and the profit taking, and then eventually the panic. In the beginning, people invest, but that stage is already over in this scenario. The next stage is the boom, which is why the value of the bubble rises dramatically. Now, if this current housing situation were a bubble, it would be in the boom period. That's not to say that this is a bubble, however. The boom period is followed by euphoria. It's when everyone's caution is thrown into the wind and more investors crowd the market. Valuations reach extreme levels like they never have before, and people inside the bubble seem unstoppable. This is quickly followed by profit taking. This is when smart investors feel like they've reached their peak and they quickly start to sell anything they can while the bubble still exists. This ultimately leads to a decrease in prices, which ultimately leads to panic. Suddenly, all of the people inside of the bubble feel threatened by the lower prices, and everyone starts selling off their assets at once, sometimes at a lower price than they bought the asset for. This is officially when a bubble has popped. It's important to note that the current housing market, in my opinion, is not a bubble by any means. However, it's showing signs of a bubble. It's not helping out everyone in the country, and it would ultimately lead to a very dangerous scenario if things aren't monitored and kept under control. So that's a wrap for this video. Do you think the market will continue to grow, or is it due for another crash? Let us know in the comments below. As always, don't forget to like this video, subscribe to our channel, and click the bell icon to be notified every time we upload a new video. See you in the next one.